Morning, everyone. Let's see if this thing is switched on. Let me get started while he's setting up the presentation. I just want to take a quick poll. How many of you have invested in startups? May I have a quick show of hands, please? This is impressive. This is about half of the audience. It's extraordinary. So I have a slightly different view on startup investing based on my own personal experience. Yeah, this is working too, so I'll just... So I started in investing, actually, where is it? Are we putting the presentation up? Oh, there we go. Okay, great. Thank you. So I moved to the US in 1989, and essentially after undergrad, became a professional investor. And the last 10 years of my career, I managed a global equity fund at Fidelity Investments in Boston and London. And the fund, by the time I retired, grew to about $35 billion. And essentially, I had a change of plan. So I wanted to follow my other passions in life, in health and other things, and also wanted to spend more time back in India. So I retired. But during my professional career, I've invested in more than 2,000 listed public companies. So I've invested in every sector around the world, developed and emerging markets. I used to spend pretty much my entire professional career meeting 4 companies every day, and I can say that I have a lot of previous experience in investing. But when I retired from Fidelity, I decided not to do public investing and actually wanted to do pretty much angel investing. The number one reason was actually something very personal. I wanted to stay current with new technologies. I wanted to spend my time with young, smart people, and I wanted to continually learn from what is happening in the world. And the best way to do that is get involved in startups and get involved in angel investing. So that was essentially the reason I got into it. But the moment I started to do angel investing, I thought, I should try and make a little bit of money out of it as well. So because it's not just for fun, let's actually do it in a structured way. And being a public market, stock market guy, I wanted to take a portfolio approach to investing in startups. And I'm sure a lot of you are investing because your nephew or your niece or somebody came to you and said, Uncle, can I have $100,000 to get my startup going? And that's how you're doing it. But in my opinion, if you're going to be an angel investor and you're expecting to make a return other than an emotional return out of it, you should do it in a structured way, just like you do any other investing, whether it is real estate or public stock markets or bonds or anything. You should approach angel investing in a very structured way. And I'll explain to you my own experience of angel investing and why I think that's probably a good way of approaching it. I have currently invested in the last 5 years in 24 startups. 2 of them I exited, the bottom ones. One is an oil company in Nigeria. The other one is a preschool company in India. So those 2 are my exits. And I have 22 current active investments. And you'll see from this list that it has just absolutely no correlation with anything. It just reflects the fact that as a professional investor, I've invested in all kinds of sectors. So I'm very comfortable investing in pretty much anything. And I have a simple view that if the CEO or the startup founder can't explain what they do to me, then probably it's not a company that I would want to invest with. So if I can understand what they're doing, I'm pretty happy to consider it. And so I have companies in social investing, I have in education, I have animation, I have healthcare, organic farming, oil and gas. I have a fund, an early stage startup fund in Singapore, fitness. So it's a complete mishmash of companies. And the only thing they have in common is they're all run by very, very, very good teams of people. So how have I done in the last 5 years? And I think this is where taking a portfolio approach to angel investing is very important. Of the 24 startups, and I'm going down the list, increasing return and decreasing pain, as I call it, Two of them, I've lost 90% of my money. So basically, I invest about $100,000 per startup. That's my approach. Anything more than that is sort of out of my personal ticket size. And two of them, I've lost 90% of the money. One of them, 100% gone. One is a social investment where I don't expect anything other than a return of my capital, and that's worked out pretty well. The two exits that I had, one gave me a 30% return in 3 years, the other one 60% return in about three and a half years. One, I made a partial exit, my earliest startup, and I got 50% return in 5 years. So I got half my money back in 5 years. 7 of them I've invested in the last couple of years, so it's too early to say. 6 of my startups, looking like 2 to 3 times. One is up 3 times already. One of them, unfortunately, I didn't get a big piece of it. I got a very small piece of it. It's up 100 times. But it's not, it's not big enough an investment to have a major impact on my portfolio. And the last one, which very, very happy to talk about as a case study, and I'm very fortunate to have invested in a company that's up 30 times, and it's going absolutely crazy. It's in a hyper-growth mode. So I think I'll do quite well out of that company. And you'll actually hear the founder of that company give a speech tomorrow in the afternoon. Now, here is the reason why it's important to take a portfolio approach. I essentially just set up a $2 million corpus for investing in startups at the time, 5 years ago, and I deployed that money. 5 years later, the portfolio is worth about $6 million. Now, here's the interesting thing. If you see, anyone would take that return, right? 3 times my money in 5 years, which is pretty good. But without the top number 1 performer, the value would only be $3 million. In other words, half of my entire return has come from one startup investment, out of my 24. And without the top 3 performers, the value would be $2.5 million now of my portfolio. In other words, if you take my top 3 companies out of the mix, the other 21 startups have returned to me at pretty much like putting money in the bank, right? About 4% a year. Or putting money in municipal bonds, whatever. With all the risk that angel investing entails, it's literally the top 3 companies out of 24 that have given me all the return. And this is pretty typical. I've talked to lots and lots of angel investors. I'm a member of a couple of angel investing networks. And pretty much in my experience, anyone who invests in less than 20 startups will have about an average kind of an experience. Unless, there's always somebody who, like a Shri, who, angel funded Google, made a few $1 billion out of it, but that's a very, very unusual story. Most of the experiences of angel investors are very similar to mine. And this is why I tell people, have a structured program, deploy a set amount of capital, whatever it is, 5% of your net worth, 10% of your net worth, whatever it is, but do it in a structured way and get into at least 20 startups because you need that one company that will hit the ball out of the park. In terms of investment philosophy, essentially my philosophy is growth, and I just look at companies that can extract a higher price for their product, whatever it is, out of the market. And this is an early lesson I learned. In 1989, I moved to Seattle, and I used to frequent a small coffee shop called Starbucks. And Howard Schultz, at that time, had this notion that why 50 cents for a cup of coffee, which is what you used to get in petrol stations and gas stations in those days. It should cost $4. So he managed to convince the world that coffee should cost $4 a cup. And that became a growth company for more than 25, 30 years of growth Starbucks has seen. And this is the kind of stuff that's happening in the best companies redefine what their markets. They create their own markets. They're disruptors of existing products. And essentially, when you convince the world that you're growing faster than the market, the world will give you access to cheap capital. Right? You get a higher valuation for your company. And that becomes a self-fulfilling prophecy. And that's exactly what we're doing right now. And you see, one of the things as an angel investor is that you can choose to get as much involved as you like in some of the startups, as long as you're adding some value. And I'm very fortunate that my number one performer is also a company where I'm on the board, and I'm very active, both in advising the CEO, but also in helping them raise more money. And that's the company I want to talk to you about a little bit. It's called Boland Industries. And Boland is an absolute disruptor in the manufacturing space, paper products and packaging in India. It's still very much a small company. Srikant Bolla is here. Srikant, are you in the audience? There he is in the back. So you're gonna listen to him tomorrow, and he's a rising star in the Indian entrepreneurial space. I funded Srikant 4 years ago. It was he convinced me. I mean, he was 20 years old and a very, very hungry entrepreneur, and he came and convinced me that packaging is such a fragmented space in India. And paper products are so fragmented that he could come in and disrupt the market and essentially build a Solo or Dixie. So I invested $100,000 in Srikant at a $500,000 valuation at that time. I should say the price of sales is about 100 on an annual basis. So at that time, so it was a very, very rich valuation. But I didn't. This is typical, right? When you're angel funding a startup, you're not buying anything other than the quality of the team. And Srikant, to me at that time, was somebody who passed that filter very easily. And with my money, he in 2 years he increased sales 40 times to about $20,000 a month, and he grew to 80 employees. And then we did a second angel round. At that point, we raised $200,000 at a $5 million valuation. Again, a fairly rich valuation, but he was meeting all the milestones, so it was possible to do that. With that money, Srikant got to $80,000 a month in sales. It's about $1 million a year, with 120 employees. And he's kept absolutely growing ever since. There is a convertible round that's currently open, about $2.5 million raise. And he's now got to more than $300,000 a month in revenues. So basically, in 4 years, Srikant has grown the company 20% per month. And it continues to grow 20% a month. And this is in manufacturing. So, and this is in manufacturing. In the digital space, you see these kind of numbers. But, when you're talking about growing 20% a month in manufacturing, I'm sure many of you who are in that space will understand. Think about the inventories. Think about the raw materials that are piling up, right? So he's got 10 manufacturing units, and it's absolutely amazing. And the other thing he does is he's got a very clear mission as to how to do a startup, right? He's disrupting a market, number one. Number two, he's creating a premium product out of eco-friendly waste, palm leaves primarily. And the third thing he's doing is he's providing employment and livelihoods for the differently abled. So 70% of the employees of the company are differently abled. So it's literally the trifecta. And the other thing is, in 3 years, Srikant is committed to taking the company to 100% renewable power. So the next plant is going to be 100% solar powered. So he's literally redefining the whole space of manufacturing. But thank you. So the bottom line on angel investing is build a portfolio, and hopefully you'll find a Srikant or somebody like that who'll give you outsized returns. And the more of it that you do, the more likely you'll find a couple of really good investments. Most important, have fun and support entrepreneurship, support Bharat, support Make in India, and thank you very much.